As promised, the high five investment setup is going to be Crocs, ticker symbol CROX. You may know this name from the movie Idiocracy that was filmed back in 2004, and how everybody was calling those shoes so ugly. And since then, this company has completely been on the rise with revenue. It's become a staple in households for children, parents, kind of lazy wear, kind of um, uh, beach wear. I mean, they've really have grown their business and their overall revenues and EPS at an immense pace, and they are a great they're at a great value right now, if I'm being completely honest. And it's crazy because we're talking about Crocs here, but man, let's just go through some of the numbers on the high five investment strategy. So um, we can kind of see the breakdown of the numbers here. Um, we have a $6 billion market cap. Our free cash flow margin right now is actually 23%, but I'm putting in some buffer of safety for the next 5 years as a 10-year analysis. For the next 5 years, I'm putting in a buffer of 18%, which again, they're doing 23% right now, and then 23% for the last 5 years. We have our discounted rate at 10%. We have a terminal value, which is the multiple of free cash flow, which is essentially the multiple on their free cash flow that you tie to at the end of the 10-year analysis. The average is 15 to 20 in the market, and this is getting a 10. This name is continuously being disrespected on a valuation front, mainly because of everybody just believing that it's Crocs. It's a fad. People are eventually going to stop wearing them. Well, that's been said since 2004. It's 20 years later, guys. 20 years later. And every time I am at the mall, every time I go into a Crocs store, it is jam packed. People are buying Crocs. They're buying those little medallions that go on their Crocs. They purchase Hey Dudes, which is a very popular brand as well. The name is thriving. Is it the sexiest business model? No, but they do. I do believe they have a moat, a small moat in this with their brand in this sector. And when we're really talking about it, you have Nike that dominates that side of things, and then Crocs isn't really, I'm not really worried about Nike coming after Crocs because they build out such a niche market and such a niche moat that I don't think they could really be disrupted, honestly. I mean, look at Temu. Temu came out and they were selling these cheap Crocs, and like Walmart and all these other companies sell these cheap Crocs, imitation Crocs, and their revenues are still on the rise. Their free cash flow is still on the rise. Their EPS is still on the rise. So why does it get so disrespected? I don't know, but I don't care. I'm going to invest in this company. This is an investment. I'll get into the technicals here in a minute and show you some things I'm seeing on the charts. But this is an investment for me. I just bought $10,000 worth of the share stock today. I have been an investor in the past. I got out about a couple months ago because we had this massive head and shoulders pattern on the stock. As you can see here, left shoulder, right shoulder, head, and it broke down and then dropped all the way down here. So I did get out, and I said I'd buy at lower prices just because I wanted to lock in the gains, and I saw the technical analysis. And that's how the technical analysis can help you as an investor as well, because it could show you when something really bad is about to happen and your stock's about to fall off a cliff, and you can lock in some gains and buy in at lower prices, especially if it's right around the price that you were buying at. So, like I said, great name. They pull in $4.2 billion in revenue per year. Like I said, it's a $6 billion market cap. So price to sales and everything is crazy low. They're pulling in almost 1 billion, and these are all updated numbers from their last quarterly report. And the reason the stock has plummeted so much after the last quarterly report is because their outlook was a little weak. But I'm taking in consideration of them not doing more than like 3 to 6, really 3 to 5% revenues, 4% average per year over the next 10 years, and we're still getting a terminal intrinsic value or fair value of $165, guys. It's a $105 stock today. So $60 higher, 36%, ups or over 36% upside, for fair value. And that's with a 10. Like I said, like this name could get a 15 and then boom, you're up to $209. So it might never get respected, but here's what I'll tell you. This is a value investor's dream because you have free cash flow, which is just through the roof. And this discounted free cash flow model right here is just super sexy with how much free cash flow they're pulling in. They only dilute by like 30 million a year, which is crazy when they're pulling in almost $1 billion of free cash flow. Their debt is their cash to debt ratio is 1.5 billion. They have plenty of cash and everything on the balance sheet. This just takes in multiple factors. Not worried about it. And they're paying it down as they go, along with they continuously buy back shares, which again is a value investor's dream. They're buying back cheap shares. And, this just went from 62 or 63 million shares to now only 59 million shares. So, yeah, they're buying back share like crazy right now. And, it's look at these numbers. I mean, free cash flow yield of 15%, forward free cash flow yield of 12%. An EPS this year of 12.91 expected, then next year 13.10 for a little bit of a down year, I guess. But they could, I think the economy is going to be great, and I think they might have sandbagged numbers a little bit for next year. But a current PE of 8.2 and a forward PE of 8.1 and a PE of 8 with the moat and the niche that they've created for themselves over the last 20 years and a peg ratio of 0.91. I mean, this is just insane. I mean, insane, guys. If we look at everything here, it's just phenomenal. It's a buy left, right, and center. And that's why I'm buying this name. EPS growth expected to go to $22.87 according to analysts. I mean, these are analyst numbers and these are analyst numbers. My personal numbers would be actually higher, but I'll take the analyst numbers that are like super bearish in my opinion. And even I was a little like, conservative here because they're already doing 23% on the free cash flow margin rate. So I even am a little bit bearish and, not bearish, but just like a little bit reserved on the numbers. And look, we're still popping out a $165 fair value. Fair value just means this is what it should be at or higher based on the numbers. So it's just always been a disrespected stock. That's why whenever you see it get going, it really starts to fly upward. And yeah, I'm really liking it on the high five investment strategy. We got a high five setup. Obviously, we got a 5 of 5 score, meaning our free cash flow yield, our forward free cash flow yield, PE, forward PE, or discounted free cash flow model, our peg ratio. It all aligns. It's all green. It's all screaming a buy. So that's where we're at there. Let's look into the technical analysis a little bit. So it's not a high five setup on the technical analysis. I'll just be completely blunt with you. But look at this weirdness that we're seeing here. So I wanted to point this out because, like I said, I'm buying this as an investment. But let's look at the technical analysis outside the high five setup. I'm looking at this and I'm seeing what? Since 2022, we started this beautiful blue line here. This blue line is a trend line. This trend line is been dated to 2022, and we bounced off of it here. We bounced and we came down and bounced off it again in 2023. And look where we just bounced off of it again for a third time over 2+ years. We bounced off of it again last week. So not only that, but look what happens when we run into the 200-day moving average. We pull down below the 200-day moving average. We come up, we bounce down off of it, and then we break right through it the next week. We come down through the 200-day moving average. We go up, we bounce down, we break right through the next week. We come down, break through the 200-day moving average. We come up, bounce down, What are we going to do next week? I think we're going to break through next week and go up and continue to climb up like we do here and continue to climb up like we do here. Now, let's get a little bit more weird. So we have a 301-day time frame from this bounce off the trend line all the way up for 228% move, all the way up to the peak. And then we have a 51% drop down to the bottom, down to the trend line, 189-day move. Then a lightly a little bit of a smaller move or time frame of 224 days to go from bottom to top of 123%, and then a similar but smaller also time frame of 154 days compared to 189 days to get a drop of 42%. So close to this. So what do we see? We see smaller gains, but let me clear this stuff. We see smaller gains and we see smaller losses while also seeing smaller time frames on both the upside and downside. So I calculated this for this next move. I calculated this to be about the same time difference down from 301 to 224 down to 147. So that same time difference down here, but I would really put it to 147 to like 180, 175 ish. So we're looking at April 2025 till May 2025. So give or take about a month, right? But I'm staying a little conservative with this, but look at how this is playing out over and over again. And it's playing out like this because of what I said on the fundamentals. On the fundamentals, we are seeing a very just disrespected stock. And even when it gets up to these highs, guys, it's literally we're talking about still like a sub 15 price to earnings ratio typically when we get up here. So it's still just disrespected time and time again, and I believe it has a moat in this niche um, rubber footwear market. You know what I mean? Like Crocs is a very well known brand. I don't know anybody that doesn't know what Crocs are, or Hey Dudes, and what the brand is, and how they're I don't want to say innovating, but they know the styles, they know the fads, they know how to stay relevant over 20 plus years since people were saying those are the ugliest shoes I've ever seen in my life. To some people still say that, but guess what? A lot of people wear them. A lot of people wear them. A lot of people keep buying them. A lot of people buy them for their kids. A lot of people get those little medallions for their kids. They do partnerships with Disney. Like they know what they're doing. A proven leadership team can take a stock a long way. Do you think they care about these run-ups and pullbacks and run-up and pullbacks? No. Why? Because look at the trend line over the last 2 years. They are continuing to climb higher. Yes, they had a big pullback after they had a weak outlook on revenues, but their revenues are still growing 3 to 5% every year, according to analysts. And I think they could do a lot better than that, especially with the Hey Dudes brand continuing to grow after their acquisition. They continue to pay down debt and they continue to buy back shares. And with those things, they are going to continue to bring up their EPS as long as their revenue continues to grow, which I think it will. This company is only going to get a smaller and smaller PE ratio, and even as it's disrespected. And then when finally people say, okay, enough is enough. This company's been around for how long now? Their revenues have grown consistently for how long now? Right? Like it's going to break eventually. So it's still in an uptrend. This is what I'm seeing on the technicals. We're right back here. If this plays out like it did here and here over the last 2 years, I think we have this pullback this week, Thanksgiving week. We're on a volume shelf, and I think we push up into this 225 area. I think the market's also going to continue to run. We're going to get this Santa Claus rally. We're going to continue to run into end of year. And this is a mid cap. It's a $6 billion company. It's a mid cap, and I think it's going to continue to run with the rest of the market. I think people realize that the numbers are the numbers. This is a completely beaten down company. with this big pullback, and it's not warranted, especially with what they're doing. Even with the small, hiccup with the guidance and the outlook, I'm not worried. Gap to fill here on the um, on the volume profile. We got a nice gap right here to fill on the price. A nice price gap here up to about 135. So shoot this gap up here, right? This volume profile gap, anchor volume profile gap. And then we also shoot up to this massive gap right here on the price gap. And next thing you know, we're back at 130. What is that? We're back to 135.35 to fill that gap. My 127.76 break even on my options are going to be in the money, and then my 140.60 break even price is going to be I'm going to have made a lot of money with this move, right? But we're not at break even yet, but I expect this to go up to about 172. The measured move that I did with these price decreases over time, I expected it. I have it measured out to about 81% move from this bottom. So for that current price right now, we're still looking at about 63% move from where we are right now. And then also, like I said, I have the fair value with a very, very, very conservative outlook of 165. So even that, if you just wanted to go off the fair value and then say you want to sell it 165 because you don't believe in the company that much, whatever, that's still almost a 57% gainer here in the next um you know April to June. I would say April to June timeframe, we could be back up at these prices up here for that massive 50% move. And you got to realize, I get that we've had some phenomenal gainers and like some crazy like 80% moves like we just had in hymns, but like don't don't get too big of a head, don't get ahead of yourself. The average investor doesn't beat the market, and the market returns 8 to 10% returns per year. I'm telling you, I'm talking to you about a 50+% move here in the next 6 months. So always remember, always, keep yourself in check, always check yourself, humble yourself, do what you got to do. But like, understand, like, as an investor, trading is awesome and we make lots of gains. But when you're talking about the investing side, you got to take the trading side out of it. You got to realize getting an 11% year or move in anything in less than a year is phenomenal, because you are indeed beating the market. Okay. Now this year, 2024, you had to get more gains to beat the market, but over time the market returns 8 to 10% average, because some years we have down years like 2022 and 2023, and some years we have up years like 2022 and 2024, just massive up years, and then some down years, right? So keep yourself in check, stay humble. This is what I was thinking about Crocs. First price target's 125 to fill this gap. And then you saw that other gap fill at 135. So you could say 125 first price target of 125. And then you could say second price target of 135. You can call fair value on this company at 165, and the move that I believe it'll have is 172 or more. Like I said, it's an incredibly undervalued stock, in my opinion, on everything we're looking at. And the technical analysis here, though it's not a high five setup, it is a high five setup um, on the swing trade, on the high five setup swing indicator. We are green, and we made a higher low. We bounced off the 9 EMA, and we were moving higher to fill this gap up to 130 still, and to fill this giant gap right here, like we talked about. So we have these massive gaps to fill. This is on a daily chart, so this moves faster than our weekly chart, right? So this is red right now on the high five long term setup, but on the daily we're swinging higher, which then could flip our long term into green, and then we continue higher, right? So yeah, I really like this setup as an investment. Again, an investment. I'll let you know when we swing to green on this. If you want to get in on a trade on the high five setup, I'll definitely let you know. And once we get some sort of pattern here, drawn out, but we have a beautiful trend line that we've, haven't broken through for the last over 2 years. We're getting this play out like we've been. Huge bounce off that, huge bounce off that, huge bounce off that, little bit of consolidation, and then we break through the 200-day moving average. So yeah, like I said, I really like this name, and let me know in the comments what you think of this name as well. Thanks for tuning in, guys. Happy Thanksgiving, happy holidays, and I hope you have a great one with all your families like I will. Thanks.